In the previous video, we had talked about the measures of US money supply. We talked about M1 and M2. Now, the important thing here to remember is there is a really big difference between what is considered money versus what is considered wealth and what is considered as income. Okay, so money we've already described. This is currency plus deposits. This is the definition we're going to roll with. Of course, there are other measures of money supply in the US economy, M1, M2, there was M3, and there are so many others. But money is defined as currency plus deposits. Wealth is given by the difference between the assets you own and the liabilities you have. And income refers to the earnings that you have during the year. Okay, this takes us to the next thing in our chapter, which is to talk about central banks and monetary policy. Now, central banks are institutions. These are institutions that oversee the banking system and control or regulate money supply. So they're controlling M1, M2, and other definitions of money, of how much money is out there. So these are institutions that do that. And the way they do it is through a policy which is called monetary policy. So in the name itself, you can see that this is about money. And so monetary policy is conducted by a country's central bank, and it basically helps in setting the money supply. So it is setting the money supply, or setting of the money supply by policymakers, sometimes also called central bankers. So policymakers, these are central bankers as policymakers in the central bank. Okay, now in the United States, the central bank is called the Federal Reserve. Referred to as the Fed many times. So when we refer to U.S. monetary policy, we might actually be saying that the Fed did this and the Fed did that. Okay, but in different countries, you would have different central banks. For example, in Canada, it is the Bank of Canada that is the Canadian central bank, or in Australia, it's the Reserve Bank of Australia. In India, it is the Reserve Bank of India. So you have different central banks that are making monetary policy for those countries.